and good afternoon. My name is Prita. I'm from the Consumer and Investor Office at the Securities Commission Malaysia. Welcome to today's InvestSmart Online Series webinar. Today's webinar is entitled Sustainable Investing in the New Normal, an understanding of the sustainable and responsible investing. First of all, we would like to thank you for taking your time to be here today. Next. We are pleased to have with us today Mr. Balkaisi Taufik from Maybank Asset Management Sdn Bhd to present on the topic Sustainable Investing in the New Normal and Understanding of the Sustainable and Responsible Investing. Please allow me to share a brief background on Mr. Balkaisi. Mr. Balkaisi joined Maybank Asset Management Sdn Bhd as the Head of Investment Specialist and Project Management Office in June 2018 and is responsible for leading the investment specialist team as well as executing the firm's project and strategic initiatives. He was previously the Associate Director of UBS Investment Bank Kuala Lumpur, where he was part of the equity sales and trading team and managed the firm's institutional clients. Mr. Balkaisi has 9 years of experience in the Malaysian financial industry, where he started his career as an institutional sales dealer at TA Securities Holdings Berhad and MIDF Amanah Investment Bank Berhad. With that now, please stay tuned till the end of the session as we'll be having a short Q&A session followed by a pop quiz session for all the participants. Further to this, we would like to invite all the participants to take our survey. The link will be shared in the chat window. Next, please. Please do follow us on our social media platform for useful information on investing and latest updates on our initiatives. Now, I'll pass it over to Mr. Balkaisi to share his presentation on sustainable investing in the new normal and understanding of the sustainable and responsible investing. Over to you, Mr. Balkaisi.
Thank you, Prita. Assalamualaikum and a very good afternoon. Thank you so much for having Maybank Asset Management today for the webinar. And thank you so much for joining us today for the audience. Let me just share my slides here so that we can start the webinar. Okay. So today I'm going to talk about sustainable investing in the new normal especially, and I'll give a brief introduction of what sustainable and responsible investing is, particularly in the context of what we're doing here in Malaysia, and also some of the ways, or at least one way, that you could invest and start investing sustainably while generating potential returns for your investment portfolios. Right. So first and foremost, I think we should address what is sustainable and responsible investment, right? So SRI, as short, we'd like to call it, it refers to the application of sustainable development principles in the financial investment, right? So in Malaysia, SE in particular, they have identified early that the global trends towards investment that addresses climate change, social issues, governance issues will be a major force in the financial landscape, right? So before this, investment is totally about making money, but nowadays investment is also about making making the world a better place, right? Not only for the environment, but also for the companies that is being run and also for the society. So under the CMP2, the Capital Market Master Plan 2, there was a 10-year strategy blueprint that ended last year. Now CMP3, of course, has another set of blueprint to recognize the role of capital market in the sustainability agenda, right? So under that master plan, the SE is basically saying that the expansion of capital market will create a market-based solutions to basically mobilize investment in tech and ventures into initiatives that promote sustainable and inclusive development. This is very key because a lot of sustainable initiatives, whether it's coming from an investment perspective, banking perspective, rural development perspective, needs to be driven on a central level so that it's more effective. Right? But in our sense, on the investment side of things, the SE has recognized that the capital market players are capable of bringing scale, financial discipline, and commercial accountability to the social and community-based enterprises as well as projects. So basically, we can drive the sustainability agenda for the country, right? For the good of the country. So by leveraging our expertise in Malaysia, I think a lot of people know about this, that because we do have a leadership status in terms of Islamic capital market, and there is a lot of similarities, the alignment between Sharia or Islamic finances, Islamic financing, and sustainable finance, sustainable investing. There's a lot of similarities there. So we should use that as a foundation and position us Malaysia as the champion for our SRI agenda. So there is a roadmap in terms of how we want to develop this, right? So as you call it, 5I strategy, which is developing a facilitative SRI ecosystem in the Malaysian capital market. Okay, so basically there's 5 steps in making sure that not only the capital market players are embracing sustainability, but also allowing investors, the people in the country as well, to have access to sustainable investments. So it covers the range of SRI instruments, right? So as you facilitate the development of new SRI capital market products, increasing the investor base, building a strong issuer base with not just the investment managers, but also the companies that issues this investment instruments, a strong governance culture, and also an architecture, an information architecture, so that because sustainable is fairly new, especially in this part of the world, people need to understand what is it, why do we want to do it, how is it being done, etc., etc. So all of this is being in place already, and we've seen those developments being quite aggressive in the past couple of years, and we do expect this to be here to stay. Okay, so these are some notable initiatives by SC. I'm not going to go through everything. I think you guys can read it on SC's website. But one of the main things recently is probably the launch of the SRI roadmap, right? To develop Malaysia as a regional SRI center. So we want to be a part of this as well at Maybank Asset Management. We want to support this initiative. Hence why at Maybank Asset Management, we want to be providing our investors with Sharia compliant as well as ESG or sustainable investment solutions first, if possible, right? So we are developing that at Maybank Asset Management as well. So before we go through all of these details, right? We went through what SRI is, what SC is doing, but the key question is, what is sustainable investing? To make things easy here for everyone to understand, basically sustainable investing is an investment strategy that adopts ESG factors to enhance long-term returns to manage risk. So what is ESG? E, S, and G refers to environmental, social, and governance, quite simply, right? So environmental basically addresses issues that are related to company use of resources, pollution, management of pollution, and other physical environment. So the environment. Social is looking at how the company interacts with the communities that it operates in, right? So not just how they make money, but how they are in terms of where they stand in the society. And governance is basically how the company is run. So sustainable investing look at these factors. They look at how the company affects the environment. They look at how the company affects the social. They look at the company, how it's being run, and put that into the investment decision, right? So again, like I mentioned earlier, back in the day, investment is how much money you can make. Nowadays, it's also how much impact does my investment have to the world and the society. And that has been the key. So why sustainable investing has been quite popular, especially in countries in Europe as well as Northern America, is because there is a shift in how the economy or how people derive their returns, how people run their companies, how people look at generating income, generating returns, right? So, of course, the pandemic has been a good catalyst for this, but I'll touch on that later. But if you look at the left chart here, the importance of social issues, for example, before the pandemic has also been quite high. Right? If you look at the dark green line there, 26% of the survey done has seen that it's very much more important than just not thinking about it at all. So the pandemic has brought attention to systemic inequalities before, and now is something that's even more important. People are looking at income inequalities, ethnic inequalities, gender inequalities. All these are being looked at when they want to invest in a company, when they want to run their company, right? So it is all being factored in. And who do people think, whether it's in Asia or globally, who do people think is responsible to ensure that sustainable investing would be something that needs to be done? Of course, regulators will be the one. So SC has done that for us, right? The companies themselves play a bigger role. But what's important here, I want to highlight is that as an individual, people think they do also have a role to play when it comes to sustainable investing. So that's what I want to touch, right? So it's not just what people think, what the institutions think, what the government regulators think, but even at an individual level, investors are saying, hey, I need to invest and also have a positive impact to the world and society. So that's very key. So if you look here, it started with environmental impact. At first, people were looking at sustainable investing across the globe. They were looking at environmental impact because that could be the most relatable and attractive. So wider environmental impact is the most attractive proposition when people want to invest in sustainability. So what this means is, for example, I want to invest in a fund that invests in companies that probably does not contribute to pollution, right? uh, or uses renewable energy and stuff like that. It's very relatable, very easy to understand. But what we've seen so far as well, even social elements, social considerations are being put in. How the company is being run, how the company treats the 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 people that they or the society that they operate in is becoming more and more important. And this is even more important than the likeliness of the fund or the investment giving higher returns. So this means that people are willing to invest a little bit more or make a little less money if their investments are having more positive impact to the environment and the society. This is it's quite a common phenomenon, if I can say that, because even in the sense of products, right nowadays, even when you buy an item, you want to buy an item that has a positive impact to the environment, to the society. You don't want to buy an item, a product that you know for a fact is impacting the environment or is impacting the society. So it's something that it's across the value chain, and investment is also one of the things that has embraced this phenomenon. Okay. And the climate transition has been something that is very key in the sustainable investing space, because not only the investor, whether it's institutional, whether it's retail or individual, want to invest in sustainable assets, but at the company level, if you realize, if you look at the numbers properly, if you are using more sustainable initiatives, sustainable projects, sustainable items, sustainable resources, chances are your companies or your valuations or your value of the company is being more appreciated compared to if you going on and just run your company the traditional way, where it is impacting the environment and the society, right? So there is an impact on market valuations as well. So the transition has been seen. So because not only that, as an investor, we want to invest in companies that can make us money, but we want to invest in companies that can make us money over the long term. So what people have realized, that companies that embrace the sustainability agenda has the potential to not only run their business more efficiently, more sustainably, but they could provide higher returns into the investor's pocket. So there is a push and pull factor here, but it's moving towards somewhere that is quite positive. Okay, and because of that interest, you see that there's growing interest in terms of assets. Globally, if you look at the chart on the left of the past 3 years, you see the steady increase already in terms of assets that is sustainable, meaning assets that has integrated E, S, and G factors, right? It's in billions and has grown quite sustainably over the years. It has been driven more from the Northern American and the European markets, but what we've seen as well, Asia ex-Japan, even in Malaysia, you've seen the growth to be quite sustainable and has been expedited. The growth has been quite strong post 2020, right? Because the pandemic pushed basically people to be more concerned, say, hey, we want to invest in these companies. We want to be a part of companies that could help us in this pandemic, and companies that actually have sustainability initiatives in their company, in how they run the company. They tend to look more attractive to investors. So they look at they're more sustainable over the long term. They can run their company better. So you look at the growth, and it has been huge, and it will come to this part of the world as well. Right? And COVID-19, like I mentioned just now, has accelerated sustainable investing. In Asia, the pandemic has made ESG very important for investors. When our partner Schroders made a survey, whether or not the COVID-19 has influenced investors' attitudes towards environmental social issues, yes, it has increased. right? 67% of people in Asia see environmental issues as more important since the pandemic, and 65% see social issues have been more important as well. So at the end of the day, COVID-19 has accelerated this concern, right? So again, the key here is we want to be able to invest and also have positive impact to the world and the society. And COVID-19 basically just help us realize this earlier, right? And of course, this is just to highlight, because of COVID-19, the appetite for environmental and health sustainable funds has been very, very popular globally, in Asia, Japan as well, even in Malaysia here, where we see some unit trust funds that has environmental, healthcare, sustainable theme has been very popular. But again, it's not something that we think is a trend. We do think people invest in this sort of themes because they understand that these themes, this sustainability agenda is here to stay. So when you invest, you're investing for the long term, hence why they are willing to invest today. It's just that the realization has been catalyzed post 2020. Okay. And one of the key drivers, I do want to share this fact as well. We talk about how the younger generation are going to be the next middle income, the next emerging affluent. So yes, they are starting to invest. If you see that over the past 10 years, the younger generations are starting to invest. But what is more important is where they are investing, right? So they are investing into more things that's having positive environmental impact, as well as having more sustainability in their investment portfolios. So they are shifting from the traditional portfolios to a more sustainable portfolio. Reason being, go back to the point earlier that I said, at the end of the day, people are willing nowadays to give up a little bit of returns if they could provide positive impact, right? So it goes against all the go along all the value chains in terms of sustainable funds. Same thing, right? Generally, across all age groups, you'll see that change already, but the younger generation is really pushing this, right? If you look at this chart on the left, the 18 to 37-year-old, whether or not they invest in big volumes, we can't see that yet, but they are a growing segment of the investment space, and they are putting sustainability as a big factor. And these people, they might not be the big ticket investor today, but as they grow, as their income grow, they are also going to be the big investors. And if they are focused on sustainability today, those sustainability assets will continue to grow, right? So that's on individual level. But if you look at institutional level, at companies level, they are also putting sustainable investing at a high priority. Again, it has been talked about over the past 10 years, at least in this Asian region, but COVID-19 accelerated the concern, right? So now the importance of sustainability is as important as any other factors. If you look there globally on the right here, on the first line, that 52%, 45%, it's almost as important as other factors. Other factors meaning profit, revenue, etc. All the financial elements. Sustainability is as important, and it's across the board. Whether it's official institutions, whether it's banks, whether it's insurance, all of them have recognized that this factor is important, right? Again, I'm going to talk about why later, but put this in mind that people are willing to invest sustainably, and this will result into benefits as us as investors as well. Okay. And in Malaysia, those are global views, but in Malaysia, there was a study done for people in Malaysia as well when it comes to sustainability. So people in Malaysia now, we are also feeling more positive about the idea of investing only in sustainable funds. And our positive view is even higher than it is globally. Meaning that people in Malaysia, because one, we experienced quite a bad pandemic. Secondly, we want to be sure that we want to invest sustainably for the good of our country as well. So Malaysians have felt more positive about the idea of investing in sustainable funds, right? And the appeal is, if you look here, last year 2020 when it started, people are not that concerned. They are aware, but they are not that concerned. But because of the pandemic this year, you look at the impact of the investment is because they want to invest sustainably because they want to have a wider environmental impact. They want to invest sustainably because they know, I'll touch on this later, there is a higher chance of a higher return when you invest sustainably. But of course, there's some risk, right? And because of the societal principles as well, there is a social concern as well. So Before 2020, people were aware, but they were not prioritized. But after 2021, and ahead looking at the future, I do personally think as well, even in Malaysia, people will take sustainability as a main agenda. Okay, and when you ask Malaysia what they think about sustainable investing in Malaysia as a whole, 74% of the people surveyed in terms of non-monetary benefits, right? They are happy to invest sustainably because they think that their investing would have a positive impact to the world, right? 74%. That means most of us are willing to invest sustainably because we know that if we invest sustainably, we have positive impact while making some money, right? Secondly, when it comes to risk, when you invest in companies that does not put in ESG factors, there are certain risks. You're not talking just environmental. You're talking about the impact to the social aspects of things as well as the governance of things. Companies that probably are not run properly would have a chance to have some scandals, right? And when you ask investors, would you want to invest sustainably because these factors could be solved, could be addressed? Yes, because 60% would withdraw their investment if there is some sort of climate change scandal. 60% would withdraw if there's some sort of human rights scandals, right? And more than 50% would withdraw if there's a company's workforce scandal, meaning that if I have the opportunity to invest in a company that does not have a problem with the environment, does not have a problem with the social side of things, does not have a problem with the way the company is run, I would stay invested in that company over the long term. But if they do, then I don't want to be a part of it, right? And then what we've seen, the data, because we've seen the results now over the past couple of years, when you invest sustainably, you are investing in a resilient sort of portfolio. Because if you look here at the returns, of course, historical returns is not a good gauge for potential future returns, but it's a good way for us to look at how it has done. During the COVID-19 and during the oil shock, right, last year, during the March and April period, MSCI World, which is the whole total conventional equities, was down about 13%. MSCI World SRI, which is the social responsible investing side of things, only dropped 10%. Yes, market will be sold off because of certain market conditions, but because it is something that is being controlled. That means the company is being run fairly, the future earnings are more sustainable. People do not sell off those companies as much as they sell off the conventional. But so the risk reward is something that we need to look at. This is what I want to touch next, right? Because one of the things that for sure will drive sustainable investments is, of course, is going to be returns, right? Now people are getting concerned about the social side of things. People are getting concerned about governance, environmental. But as investor, at the end of the day, it's about doing, right? We want to invest to make some money, to make some income for our retirement, for our future planning, etc., etc. So better return is going to be something that's going to drive this up and running, right? And that's one thing that we saw. So if you look at when we did a survey as well in Asia, 58% of Asian investors think that better returns would definitely drive the size of sustainable investment. And what we see is that global sustainable companies over the years delivered outperformance and lower volatility in the past 10 years. So this means that if you invest sustainably, not only you can have potential higher returns, you can do so at lower risk. So the myth that if you invest sustainably, you are going to sacrifice on returns is not true. Same goes to how we were back in the day when we were trying to promote Sharia investing, because Sharia investing do not invest in conventional banks, for example, or certain sectors. People have this perception that if you give up on that, then Sharia investing will definitely give you underperformance. You have to sacrifice returns, which is not true. Now we know Sharia investment provides competitive returns or even better returns in certain cases. Sustainable investing, same thing. What we've seen is that over the past 10 years, it has outperformed the conventional market, right? Reason being is because, again, the risk management aspect of it, the future earnings growth of it is more sustainable. Investors are more confident investing in companies that embrace sustainability, right? So if you look here at the chart down here, over the past 10 years, for example, right? The MSCI World SRI, which is the socially responsible investing index that represents sustainable investing, did about 10% per annum. MSCI Equi World, which is the conventional equity side, only 9.7%. Right? Yes, it is there, but sustainable investing did better. And not only that, it did so at lower volatility. That means you are investing with the potential of higher returns at lower risk when you invest sustainably. Okay, but of course, when it comes to sustainability, there are risks. Something new like this, there will be some risks, right? Whether it's coming from an investor's perspective or coming from the issuer's perspective, right? So some of the challenges for sustainable investment is, one is greenwashing, right? Because there's rapid growth of ESG investment, ESG or sustainability focus. There's a lot of people trying to take advantage of that because investors want to invest sustainably, so they will fake it and try to make their companies look sustainable as well. So that is a higher risk, right? And the reason for that risk is because at this point of time, today, there is no consistency in terms of data when it comes to ESG. So for example, if I want to put things in perspective here, in Malaysia, for example, when it comes to Sharia compliance, we have a centralized Sharia compliant rule or guidelines, right? We know this is not Sharia compliant, that is Sharia compliant, etc., etc. At this point of time, when it comes to sustainability, when it comes to ESG, it's a bit more subjective. Certain parts of the world, certain institutions, certain companies define ESG differently. So there is a risk of us not being able to understand what really is ESG. But I do believe that in the future, these things will be addressed, whether it's driven by the regulators, the government, or even by the companies themselves, to have a more standardized or at least an understanding in terms of the sustainable principles. Of course, some of the challenges as well will be costs and performance concerns. Again, people have this subjective, or there's this assumption that if you invest sustainably, you are going to sacrifice returns. Like what I show you is not entirely true. When in terms of cost, a lot of companies would think that if you were to they change their business model to be more sustainability, such an expensive thing, right? So there are a couple of challenges, but again, these challenges are not something that cannot be addressed, cannot be fixed. Over the future, we do think is going to be something that is here to stay, right? This is something that I want to touch because a lot of people nowadays, when they invest sustainably, they invest in, or they use, they invest, what is it, using data that is from a third party, because the skill set when it comes to sustainability is still not there yet throughout the world. So people are relying on third party data. So it could be inconsistent because one data provider versus the other could interpret ESG differently. So it could be one problem, but of course, I think it will be addressed over the longer term. Okay. So the next thing that I want to touch about, so I touched on the sustainability, right? You know what is SRI, you know what sustainability is, why sustainability is. So how do you invest sustainably? There are a lot of funds now in Malaysia itself, unit trust funds that is under the SRI guidelines. But I'm here to talk about our fund. This is our first sustainable fund, our Maybank Global Sustainable Equity I Fund. It is a retail unit trust fund that was launched back in August 2020, right? It is a qualified SRI fund. And uniquely, this fund integrates both Sharia and sustainable principles, right? So what we did was, before we launched this fund, actually we, together with our partner Schroders and our sister company Maybank Islamic, we did a white paper in 2019. So the understanding here is trying to see the alignment between sustainable investing and Sharia investing. So is there similarities? Can we integrate both? So what we found out is that there's the foundation, the guiding principle of both Sharia and sustainable, there's a lot of similarities there, right? So to close the gap is not that hard. But of course, sustainable investing, it's more integration in per se, meaning that you try to integrate the process. For Sharia investing is a bit more exclusion. That means you cannot do this, you cannot do that. So, but to combine both, I do not think it's going to be really hard. And here, this portfolio, this fund portrays that, right? So if we do have, we integrate sustainable investing, we use Sharia screening, can we then have a very positive or strong investment portfolio? And here's the result. Okay, so again, the fund is called Maybank Global Sustainable Equity I Fund. Some of the features is, one, it is ESG and Sharia. So uniquely, it is investing in global equities that is integrated with both Sharia and ESG principles. Secondly, it's a target return fund. So the fund invests in global equities and targets 8 to 10% per annum, with a potential annual income yield of 3% per annum. Again, this is a target return. It's not guaranteed, but the way it's being managed, we want to target 8 to 10%. The approach, the investment thought behind it is a high conviction. What it means is that we do not just invest in companies just because the index holds it. It's a bottom-up approach. So you will see 30 to 35 stocks being held in the portfolio because those are the 30 to 35 best ideas we have for the ESG and Sharia equities globally. Okay, and because it's a global fund, at Maybank Asset Management, our expertise are in Islamic, local, Malaysian, Singapore, Indonesia investment, as well as regional equities and fixed income. So when it comes to global, we prefer to work with a global partner. For this, we work with Schroders. So Schroders here is our investment advisor. So we are the fund manager, right? Schroders advises us on the global equities portion of it, right? And it is a Sharia compliant fund. So we have Amani as our Sharia advisor. Okay. So just wanted to share with you before we go detail into the fund is the track record in sustainable investing, right? So Schroders have done this for quite some time already. They have done sustainable investing since 2010. So they do have a conventional sustainable strategy. This is as of May. So the performance has been quite consistent, about 12%. But what we have with them is a more bespoke, customized solution for the Malaysian market, which is Sharia compliant as well. Okay, so why we wanted to combine both? Because this is what we found out, right? If you look at global Sharia equities, you look at socially responsible equities, you look at global commercial equities separately. You look at the returns, right? Over the past 5 years, global Sharia equities, socially responsible equities did better than commercial equities, right? Same goes to volatility. That means on the upside, it's doing better. On the downside as well, it's also doing better in terms of risk, in terms of the volatility. That means it's less volatile compared to commercial equities. So if you combine both, then we have the opportunity to find companies that has better asset quality. And with that, it could basically translate into potential higher long-term returns with potential lower risk, right? So we combine both. So again, although it is not something that is established yet between Sharia and sustainability, but the principles are quite similar. And if you look at it separately, even both of these, Sharia and sustainability, does better than commercial equities. So we combine this into one fund, and hence why we have done this fund quite well. Okay, so if you look at the track record, this is the model portfolio track record that we did. The global sustainable equity strategy that we have now has done really well compared to the Dow Jones Islamic World, as well as the MSCI equity, as well as some of the peers that we have in the country. Right. So again, because of the unique combination of both sustainability and Sharia and the bottom-up approach from both from the ideas that has been provided by Schroders, it has done really, really well. Okay, and in terms of sustainability at Schroders, the reason we want to work with them, not only because they're one of the people that are up there in terms of global equities, but in terms of sustainability, they have done ESG integration over the past 20 years, 20 plus years, actually 21 years to be exact, and they are an A+ UNPRI signatory, right? So they have fully integrated sustainability into their firm, right? In their investment process, into their value chain, everything, right? So when we look at the investment approach of how we get their advisory is when they look at a company, they look at all these factors, not just the financial things. Those are the traditional things, of course, has to be looked at, but they look at the community, the customer, the environment, the suppliers, employees, everything. And it is a very comprehensive process, right? The reason is because we want to invest over the long term. We want to find the best ideas within the global Sharia and sustainable equity space. So Schroders will examine the ESG trends, they research the stock exposures, analyze the company's management, evaluate the impact of the investment case, engage with the companies, and when you invest in the companies, you monitor the companies. It's very comprehensive. Again, they have done this for over 20 plus years. We at Maybank Asset Management, we are also developing our own in-house capabilities for this exact purpose. Okay. In the interest of time, I will not touch so much on the market outlook side here. I will straightway jump into the performance because we are running out of time. So in terms of performance, if you look at the fund, year to date, It has done about 7 to 12%, depending on where the share class that you invest in, whether it's ringgit, ringgit H, or US dollar. Again, just to remind you here, the fund has a target of 8 to 10%. Year to date, as at September, is already done 7 to 12, right? 1 year, it has done about 13 to 14%. We launched this in August 2020. So since inception, about 1 year, it's about 13 to 14%. So the returns are not guaranteed, but because of the investment process, because of the approach, because of the feature of sustainability and Sharia, we are able to generate potential high returns for our investors. And the fund has done really well since its launch in August 2020. We've grown the fund quite well since its launch, and people have enjoyed the returns on the fund as well. Right. So it's something that we want to be able to give out to our investors. Sorry, this chart is probably the old chart. And these are some of the companies that we invest in, right? We invest in companies like Alphabet, like Guangdong Investment Limited, Persimmon, all these companies. You might see it as normal day-to-day companies, but they are able to integrate sustainability into their value chain, right? Hence why we pick the companies. And because it is a high conviction approach, we try to have a balance of both growth and income in terms of the portfolio. So you have 30 to 35 stocks, and depending on the market conditions, we probably would look at growth stocks. Like this year, probably we have tilt more towards income stocks or value stocks. And when the market just turned, we do have some growth stocks as well. Okay, so if you are interested in this fund, it is available at if you go into Maybank, you can go into Maybank and have these funds. It's available via the relationship managers or the personal financial advisors, or alternatively, you can go into Maybank to you. It is available on Maybank to you as well. It is an equity fund, Sharia compliant, right? It is. Let me see here. Let me see where's the, okay. So in order for you to invest in this fund, the minimum initial investment is only 1,000 ringgit or 1,000 US dollar, depending on the classes that you want in, and the minimum initial investment is 100 ringgit, right? So again, if you are interested in this fund, it's available. If you have any questions on sustainability, Maybank, RS, and PFAs are very equipped about this fund as well, or you can come direct to us. I think that's the end of my presentation. I think we have some videos that we want to share as well. Before we go to Q&A.
Do you know that you can achieve your financial goals while doing good to the world and society? How? By investing sustainably. There are 3 key reasons why investing sustainably can benefit you. First, sustainable companies globally have broadly outperformed over the past decade. Second, companies that incorporate ESG factors are likely to be more profitable in the long term. And finally, companies that prioritize ESG factors tend to exhibit lower volatility. So, what is ESG? ESG stands for Environmental, Social, and Governance, 3 central factors that characterize sustainable investing. Environmental refers to issues related to the physical environment, such as climate change, pollution, and the use of energy and resources. Social refers to how a company interacts with the communities it operates in, such as customers, employees, and suppliers. Governance assesses how well a company is run in areas such as fraud controls, industry best practices, and board independence. Seek attractive returns. Seek better outcomes for the world and society. To learn more about sustainable investing, speak to us today.
Environmental, social, and governance. These are the pivotal aspects we strive to imprint within businesses by integrating sustainable and Sharia-compliant investing principles. We are closing the gap and laying the bridge for a better, sustainable future. Let's embark on this journey by increasing your ESG values with Maybank Global Sustainable Equity I Fund. Maybank, humanizing financial services.
Thank you very much, Mr. Balkaisi, for the very informative session. So now we will move on to the Q&A session. So we have a few questions that we have received. So the first one is basically how to measure or find out the ESG status of a company, for example, Tenaga or Maybank.
For Malaysia, the ESG status currently can be found on Bursa's website, right? The FTSE for Good. But for other companies globally, for example, it's very tough. That's the thing that I highlighted earlier. Is because it is not like how Sharia compliance is. This is not. So it's very much dependent on the data that the company, the firm, subscribes to. So currently, the fund managers, whether it's local or global, they have their own definition of it. So you need to check with the fund manager of how they look at sustainability. Like for example, for us, for this particular fund, the Global Sustainable Equity I Fund, Schroders has a very comprehensive database of what they have indicated as ESG compliant in that sense, right? So they can only invest in those companies. But because we have a Sharia compliant element as well in the fund, so that companies, although it's sustainable, needs to also be Sharia compliant. So ESG not consistent yet, but I think under CMP3, I heard that you're trying to do it more consistent now, right?
Okay, all right. So we have another question. So how would you offset carbon emission works? I saw Bruce's announcement on Maybank purchase from TNBX for non-tangible carbon commodity, energy commodities.
Sorry, I cannot comment on that because that's on the IB side. I'm not sure about that information.
Okay, no problem at all. So, okay, the next one we have from a sustainability perspective, how is the local Malaysian industry like?
It's still fairly new. Like I shared just now, I think SC has been quite very encouraging in terms of promoting sustainability under the SRI roadmap. In terms of investment flows, we've seen it to be quite aggressive. I mean, it has grown quite extensively 2021, post-pandemic last year. Even number of funds, if you look at the SRI number of funds, has grown. When we launched our fund, only 10. Now I think it's close to 20 already, because there are interests both on the individual side and the institutional side. On the institutional side, people like EPF, Khazanah, QAP, they are already signatories of PRI. So they are trying to drive it on their side as well. So it is fairly new, not just Malaysia. Throughout Asia, we are fairly lagging in terms of embracing sustainability compared to Northern America and Europe. But we are expecting this growth to be quite strong over the next couple of years.
Okay. So another one, is there a global ESG rating?
For funds, yes, there are some companies like MSCI has a global ESG rating for funds and stuff like that. But for company ESG rating, it's inconsistent, right? So MSCI will rate it, let's say ESG rating 4-5 for one company, and then you have companies like Sustainalytics that will rate it differently. So there are global ESG rating providers, but it is not consistent across the board.
Okay, all right.
Yeah, but you can check out MSCI and Sustainalytics if you want to.
Okay. Okay, so the next one, okay, there's actually a lot of questions coming in, but maybe we'll just take the last two questions. So the next one, is this fund in the PRS scheme?
No, it's not. This is not a PRS. It's a normal unit trust fund. Yep.
Okay. And the last one we have is, okay, so basically the inquirers say that I noticed there are a few fund houses showing stats and funds of Asia x Japan. Is there any reason to exclude Japan in this ESG context?
In ESG context, we don't exclude Japan, we do have Japan, of course, in our portfolio global. But a lot of our Asia ex-Japan portfolio, usually we do exclude Japan. Reason being is because Japan carries a different volume, is a different volume proposition, volume characteristics, and the way it's being treated as a stock as well. It's similar to how the US and the European market is more developed market. Asia ex-Japan is a bit more growthy, while Japan is not the same characteristic. But for global funds, we do not exclude Japan. We do invest in Japan as well. This fund has some exposure in Japan.
Okay, all right. So thank you very much, Mr. Balkaisi, for the Q&A sessions. Thank you everyone for joining us today, and thank you, Mr. Balkaisi, for speaking in our webinar. Do also check out our previous webinar sessions on our YouTube channel. Just a quick reminder to all, always check if you're dealing with authorized companies and individuals before parting your money. Also remember to never ever deposit money into individual bank accounts, even if they're licensed or registered with authorities. With that, we have reached the end of the webinar. Stay safe, and if you need to be out, always maintain physical distancing. Hope to see everyone again in our next webinar. Thank you.